Hi there. PayPal is quite undervalued at the current price, at the current market cap about 70 billion. From this level, you can get a return more than 7% a year. Might be 10% or even more than that, 15%. It all depends on their future growth rate. But now, right now, this company is quite undervalued. And let me show you why. Maybe you already know that they announced another share repurchase program of about 15 billion. 15 billion. And you look at the market cap of 70 billion, that's quite a lot, especially if they continue to buy at these low prices. Moreover, if you look over the years, during the last 3 years, they've continued to buy stocks, their own shares. 4 billion in 2022, 5 billion in 2023, 6 billion in 2024. And for 2026, they expect to continue another 6 billion. What does it mean? Well, the value of shareholders, especially those ones that are buying at those low prices, around $60 or $50, the value will go up in the long term. From this level, you can easily have a double. Especially if they continue to buy these low prices and their earnings go up, you might have more than double. Over the next 5 years, 5 to 10 years, you'll have a double. Now, they also provided guidance for the next year, full year 2025. And you can see that their free cash flow is expected to be between 6 and 7 billion. So this is quite a lot. This means the price to free cash flow at the current market cap is expected to be 10. And as this company keeps growing, this is quite cheap, quite undervalued. Their repurchase program, 6 billion for 2025, as I said. Capex, low capex, this is quite important, 1 billion. And you see their earnings are expected to increase by 6 to 10% non-GAAP earnings per share, and transaction margins by 4 to 5%. So this is great. This is great. Now, all you have to know about this company, there are some indicators you have to track. If these indicators go up, your investment in PayPal will do quite well. And those are the total payment volume, the take rate, and the active accounts. So 3 indicators you have to follow. If they go up, you will make a lot of money. So let's take it one by one. Active accounts. You see an increase from 429 million to 444 million. It's not that much compared to past years when the growth rate was higher, about 9%, but they maintain their active accounts. And this is important. You see a growth rate around 1 and 2%. This is important. In 2023, their growth rate has declined. So this is important. As long as they maintain their active accounts and the total payment volume goes up, plus they may offer other services, they'll be able to generate more earnings and free cash flow. Now, the second indicator, as I said, is the total payment volume. Here, you see a higher growth rate. And this is much more important than active accounts, because from this volume, they charge a fee and that represents their revenue. So as you can see, year over year, for the last quarter, the growth rate was about 7%. And this is quite important. And also the revenue has increased by 4%. So as long as this number goes up, you are well off. Of course, you can also check by geographic areas, US, international, cross-border, but the total payment volume is all you need. Then the take rates. Now here, if they can maintain this take rate about 1.9, 1.8% over the next 5 to 10 years, then for sure PayPal will more than double from this level. If take rates go down to, let's say, 1% or less than 1%, and the total payment volume doesn't grow that much, then you will have a problem. So you also have to be aware of this risk. Now, The biggest risk with this company, as I said, right now, if they continue to grow, and you've seen their guidance, you see that they have clients, total payment volume is going up. At the moment, your return, plus they also do some buybacks, quite a lot at the current price, your return can be more than 15% a year from this company. So in the next 5 years, you can have a double from PayPal. Easily, a double. And it's quite a good company. If you look at their margins, past revenue and earnings, you can see that they are quite high. So they are doing quite great. Now, the only risk with this company, as I said, the biggest risk I see with this company is the competition. You see here some of their competitors: Stripe, Shopify, JP Morgan, and others. Amazon Pay, Apple Pay, and so on. Now, the more competitors they face, the harder will it be for PayPal to maintain their take rate. Because, for instance, if Stripe lowers the fees for merchants to less than 1%, then PayPal has no choice. They also have to lower their take rate to maintain their customers and the total payment volume. And this is the problem I see in the long term. Over the next 5 years, I think that this company can double. But then, I'm not sure if they can maintain those high profits. But there is a way to continue to grow, to maintain the profits, even if those take rates go down. They might go down to 0.5%. There is a way to grow their profits. And that is to offer other services. Here, you can see they make most of their money from online commerce. On offline commerce, PayPal penetration is less than 1%. And then they have ads, commerce, and credit revenue. So PayPal may become a bank. To offer some credit services. If they do that, even if the revenue from their take rates go down, they can make money from other services. Banking services, financial services, commerce, and ads. They can do that. They can also make money from these services. So overall, even if the revenue declines from these take rates, they can make money from the other services. So they can balance this decline from competition if they really face problems, or they can continue to grow at a higher rate from the additional services. So they have more ways to make money. They can easily find new ways to make money. All it matters is the management. If the management is capable to take action at the right time and follow the right strategies. If they have the right strategies, the right capital allocation, then you don't have to worry about competition. But as I said, the biggest risk I see for this company is competition, which might lower those fees. If PayPal can survive, can offer better services, a better platform, high convenience to their customers, then they will continue to survive over the next 5 years and continue to make more money. If you look at their latest report, you see revenue has increased in 2024 compared to last year's, and also their earnings, but net income has decreased a little, as you can see here, compared to last year, 2023. But if you look at the operating income, which represents the real earnings from their revenue, has increased to 5.3 billion. You see this decline in their final earnings because they no longer have other income as they had in previous years. So this company keeps growing, continues to grow at a small rate. They are profitable, their earnings continue to go up, but you have to be aware of competition, which might put PayPal in trouble. So you have to be aware of this. The current price, as I said, you can have a double. Even more than that if they are doing great. So that's it for this video, and if you have other questions, please let me know in the comments.